Hello and welcome to Instant Insights. At Global Data Strategic Intelligence, we track over 100 tech, industry, ESG and macro themes impacting all major sectors. I'm Romilly Leech, and today I will be talking to Emma Sturdee, analyst in Global Data's Strategic Intelligence team, all about the future of financial services. So we've already done 2 episodes now on our new series of the future of reports, looking at the future of consumer and then the future of healthcare. In this instalment, we'll look at how technology will reshape the financial services industry over the next decade. So Emma, thanks for coming back to talk to us. Last time we spoke, you were telling us all about the ways AI is impacting the healthcare sector. Is it also impacting the financial services industry?
Absolutely. I mean, firstly, AI is enabling voice payments. So the ease of only needing to use a simple voice command could be an attractive selling point to customers. There could also be a potential to increase accessibility for people with disabilities, for example. And when used securely, biometric voice authentication can improve security and reduce fraud. Now, fraud is an interesting one as well, because AI can actually enhance fraud protection. So with the use of generative AI, it can analyse historical transaction data to detect fraudulent activity. So, if someone steals your card and then starts doing things that you wouldn't usually do, the AI can pick up on that. And it can generate text, images and other content using vast amounts of data and assist in real-time fraud detection. And then finally, I'd say AI can enhance biometric payments. So the future of shopping in general is actually moving towards the so-called invisible payments. So this doesn't mean that you're not actually paying, but whereby the process of paying happens automatically and almost in the background. So as exemplified by checkout-free stores such as Amazon Go, apps like Uber, and notably efforts are focused on no-touch transactions such as pay-by-palm technology and facial recognition.
Well, that all sounds very exciting. I know that this might sound a bit futuristic, but is there anything we can expect from quantum computing?
I mean, quantum computing is still in the research and testing phase in financial services, but I mean, it has so much opportunity. I mean, it could massively enhance banks' computational processing.
Can you tell us in what kind of ways that might be?
I mean, quantum computing can drive staggering efficiency gains across portfolio optimization, fraud detection again, and risk modelling. So, for example, quantum algorithms can handle complex risk scenarios, providing fund managers with more accurate and efficient insights into potential risks in their portfolios. Or, in trading, quantum algorithms can analyse vast amounts of data in real time, enabling traders to stay better informed. And this can, lead to increased efficiency and better returns. And in finance, you always want more money, so it's great.
That's certainly true. It actually makes me think about cybersecurity. Does it have any potential for cybersecurity as well?
Well, it's interesting you ask that because it is actually a bit of a double-edged sword. Because on one side, you can see, that you can use the principles of quantum computing to create new encryption methods. So banks like HSBC have trialled quantum key distribution, a method of encryption that uses the properties of quantum particles to create a key for encrypting and decrypting messages. But on the other side, it could take one quantum computer to break the encrypted methods commonly used by banks. So this puts sensitive information at risks of being tampered with, which raises concerns about cybersecurity and data protection. Financial services companies, I think, should take proactive measures to defend themselves against such vulnerabilities in the future.
Thanks, Emma. It's always interesting talking about quantum computing. What can financial service companies expect from big tech in the future?
So big tech finance regulations will have to consolidate globally to address the increasingly international presence of big tech. Actually, currently the EU is the only jurisdiction that has published guidance on international cooperation as part of its proposed big tech finance growth model, which was released February this year. Also, to those who don't know, super apps are marketplaces of services and offerings available via one single platform. So, for example, WeChat is a super app, and big tech companies will use super apps to provide a variety of financial services, possibly alongside other core business offerings like social media and streaming, all in one consolidated interface. Big tech has the advantage over incumbents in developing super apps due to its proficiency in smooth, premium user experience, something which banks have generally struggled with in the past. Finally, big tech companies like Amazon, Apple have expressed ambitions to enter retail banking. But big tech's fast-growing model will clash with regulators who will seek to control such expansions through stringent legislation. I hope that gives you a bit of an idea. But if you want to find out some more, check out that report because it goes in a lot more depth.
That's perfect. Thank you so much, Emma. And thank you again for coming on. You're always a really valuable guest. I think that's all we have time for today. So thank you for those instant insights. Thanks for listening. And from us in Strategic Intelligence, we'll see you next time.
Thanks for having me again.